Well, hello, everyone, and thanks for joining us. My name's Denny Smith. Today is Friday, January 30th, 2026. Bill Holter and I have put together a Q&A call today with Steve Mullowney, the CEO of TRX Gold Corporation, on behalf of many of the TRX shareholders. Steve has been kind enough to carve out some time to be with us, and we really appreciate that. Most of you already know Bill Holter, one of the most respected voices in the gold and silver markets, and he's joining me on the call as well. I'm looking forward to hearing Steve's latest updates on TRX and getting Bill's perspective on what's happening in the gold markets. More than that, Bill is from Texas, where everything's bigger, including his opinions on gold. We'll want to hear him talk through and how some of the recent gold developments could affect the investment in TRX Gold. Before we get started, a quick important note. Today's conversation is meant to be an open and candid discussion about TRX Gold, the broader mining sector, and the current economic environment. We're not giving investment advice, and nothing you hear today should be taken as any recommendation to buy or sell any security. Everyone's financial situation is different, and any investment decision should be made based on your own circumstances and your consultation with your financial and tax advisors. Well, that said, Steve, thanks for joining Bill and me today.
Yeah, no, thank you, Denny, and thank you, Bill. I'm looking forward to Bill's bigger gold opinion.
Yeah. Bill, it's good to be with you again, and I'm looking forward to your comments today. A lot of people don't know that you're also a black belt, and if I ask a bad question to you, I'm immediately apologizing, son. So really, I'll do my best. I want to keep you calm. Steve, let's start with you. A year ago we were in a prove it story. Today, the stock is getting close to $2. Gold is north of 50 or 5,000. And what has actually changed and what hasn't? What's your opinion, Steve?
Yeah, so look, we always like gold tailwinds, but in this business, you need to have a lot of discipline and a lot of patience. Things happen more slowly than maybe U.S. markets would like and shareholders would like. And so like last year, we were going through the strip campaign, as we mentioned. That means lower grade profile going through the mill, which means lower profitability, and it costs money to do the strip campaign to get to the better ore. And we always knew in the mine plan that you have ups and downs between ore grades, and you do need to take your lumps sometimes, particularly around stripping. So we got through that. We financed that by working with our suppliers, using some short-term gold prepays with Ormet, using some lines of credit, and got through to the other side of that. And you started to see that turnaround as we predicted in Q4 2025 with much better grades. That followed in Q1. It's following in Q2. And then you take an upside down working capital ratio, make it a positive working capital ratio, start to throw better run rates on your profitability, and here we are.
Steve, you and Mike have always been so conservative. In fact, I often tell my friends that you're tighter than the skin on a catfish. But when stocks re-rate quickly, expectations rise faster than reality. What are the next expectations investors should not assume that they're a guarantee?
Well, one is, look, obviously we like a higher gold price because it makes us be able to accelerate our goal plans. So it's not gold plans, sorry, business plans. And so when you're looking at that, there's a risk on gold price. It's gone up quite a bit, quite quickly as well. Do I believe it's going to go up over time again? Absolutely. That's my own belief in what's going on in the world. But it may have pullbacks in between there. And so that's always a risk. There's a velocity on gold price. We put out, and I wouldn't say this is so much a risk, but our PEA is a guideline of business plans. We had 3,000 ton per day plant in that. We plan to be much higher than that. We got to execute upon that. So we got to bring that equipment in. We got to size it. We got to execute. We got to get the ore out of the ground and through the mill. And there's always risk around that. And so, that is always a risk profile to business. We got to expand our tailings facility. That's always a risk in execution, but we're confident in those risks. There's always going to be risk that we can, execute appropriately to get through those sort of risks. There's always, we are in Tanzania, so there is always some, political things happening, but I think that's well under control. The country's in good shape. and we're currently in good discussions with them. So, I think what I would say is, what aren't guarantees? Nothing's guaranteed in life. But as you said, we manage risk quite well. And so I like to look at that question and say, what risk are you managing versus what aren't guarantees?
Steve, at $5,000 gold, a lot of operational mistakes get hidden. And I'm not pointing any fingers
Yeah.
at Richard or anything, but I'm an old due diligence auditor. And I'd like to know what metrics you personally watch to make sure discipline doesn't slip when margins are this strong.
Yeah. So look, you have to be disciplined. We look at this business on a per ton basis, on a cost basis. So making sure your costs are well under control is paramount number one, and not letting them run out of control. And so you'll see those in financial statements, in cash costs, but even in cost per ton metrics, and we're on top of that. Um, Look, you have rock on metal. Maintenance is a big thing, and we have to make sure that we're maintaining our equipment. There's always going to be some downtimes and some hiccups as a result of that, but you manage through those. That's just normal business operations. In this business, you want to make sure you're on side your mine plan, and that gives you confidence in your forecast, what goes through the mill, those sort of things, and consistently making sure you got the mining rates and mine plan. But this is a business that changes with higher gold price. Um, our mine plan was run at $1,900 gold. We will consistently look at our mine plan now at a higher rate, which means there may be more gold ounces in the ground that are economic than there once were at $1,900 gold. Quite confident in that.
Right.
That has to be moved into your mine plans, and you have to revise your mine plans, which may impact your maybe a higher processing rate as a result. And it may be a new mine plan coming up the other side that's much more profitable than the existing mine plan. So you constantly got to reassess all of those sort of things, and we're in progress around that. And then in this business as well, there's lots of gold at Buck Reef, and there's probably lots more to be found. We got to get the drill bit going, and we got to do that in a much more proactive way. Last year we stripped. We're going to start to turn our attention to the drill bit as well.
Bill, I know you're chomping at the bit, and I'm going to get to you. I promise I will. But I want to, while I've got Steve in this focus, Steve, investors are now treating TRX a lot less like a junior and more like a
Yeah.
growth producer. What part of the business has to mature next to justify that? Because I'm not sure that's a fair assessment right now.
Yeah. So look, you're looking at what we're doing run rate now, based on a 2,000 ton per day plant. So we've been quite clear. We plan to expand that plant. So that means, more mining, more ounces, more profitability. It's quite simple as that. And then, as you explore and you find what I'll call cheaper ounces, hopefully through that exploration drill bit, that will come into mine plan over time, which will both extend the mine life and hopefully lower cost. So that's the nature of the business. It's quite a simple business plan. Increase the plant, get more cash flow, reinvest it back into business for more ounces coming out of the ground, as well as more ounces in the ground for a longer mine life. It's quite simple.
I
Taking
feel
us
like
time to get there, though. Taking a lot of patience to get there.
I feel like a judgmental uncle on you, and I'm
Yeah.
not, I don't really want to be that way, but I am cautious. As gold prices rise, mining companies often rush into growth. Where are
Yeah.
you intentionally choosing not to grow yet?
Well, no, I wouldn't say we're not growing yet. It didn't matter in this run up to gold price. We were going to grow anyway. So the
Yes,
growth is put out there in what I'll say, a prudent fashion. I think what you're talking about is as gold prices rise, people make growth for the sake of growth and maybe not look at what has an adequate return or the risk profile of that growth. That's already been assessed at a much lower gold price. That's going to happen anyway. And so what we'll be disciplined in is figuring out how we grow beyond what we currently put into the market.
good. All right, Bill, you've been snoozing over there. Are you ready? You have been early
Oh,
and right on gold for a long time. What's different about this move above 5,000 compared to prior gold rallies? What's the difference, Billy?
I'd say there's several differences. The most important difference is that this is a devaluation of fiat worldwide.
Yeah.
In past gold rallies, they've been able to stuff it with paper
Yeah.
in New York, and the problem the COMEX is having stuffing the price is that it's the rest of the world that's buying. It's not North America. North America, for the last 6 to 8 months, on a retail level, we've seen all sorts of selling. We've seen, people have. I've asked clients of mine that call to sell, why? What's the reason? And the vast majority, people are tight on money. They're raising money to live. So I think the biggest difference is in the past, COMEX, LBMA, the paper markets were able to be the price mechanism. Now you've got, for instance, silver in Shanghai is $123, and it's what, 95, 96 in the US and in London. In what world could a $20+ arbitrage exist without that gap closing? Well, that world is where you've got buyers that are fearful that if they buy a contract and they ask for delivery, that they're not going to get it. Because if you do an arbitrage, you're buying in the West, you're selling in the East. If you sell in the East and you don't get your metal in the West, now you've got to make it short in the East. So the risk of a failure to deliver, I think, it's larger than it's ever been. And going back to the fiat devaluation, all you have to do is look at treasury balance sheets, sovereign treasuries. Look at the sovereign European treasuries. Look at the U.S. Treasury. Mathematically they're untenable at this point. I think that's what investors are sniffing out, and they're trying to get out of the fiat system and into something as a safe haven. And obviously gold/silver are monies that cannot default, and it's a natural magnet to fear capital.
Bill, in the past, when gold and silver, they were always available, but they're getting close to unobtainium. So in past cycles, gold moved, but mining stocks lagged. What's happened for capital to stay in miners this time instead of just trading through them like they used to?
I would say that just the fact that the margins now are so big. The margins are so much higher now than they have been in the past. And I think there's a belief that, we're not going to see $3,500 gold again. Are we going to get a pullback? Yeah, we're getting one today. And this may last a while. I could see maybe 45, 4,600 as a bottom in gold. I could see silver maybe trading to the mid, maybe even the low 80s. But the mindset is there's a floor. There's enough margin now that even with a pullback, it's not going to make mining companies unprofitable like we had from 2011 to, call it 2020. That was a disaster because margins compressed right after the mining industry went on a spending spree and lost control of their expenses.
Steve, I'm going to go back to you.
I'll take $4,500 gold.
Yeah, exactly.
That's one brave boy from Canada right there.
Yeah, $4,500 gold is more than what we sold gold in the first quarter. So I think we had an average price of around $3,900 an ounce. So I'll take $4,500 all day long. I think we sold gold last week at 5,000, and so look.
All right, Steve.
We're quite happy with that.
Yeah, while you're barking there from Toronto, I've got a question about attitude, and that's with mining stocks finally getting attention again. What behaviors separate companies that keep investor trust from those that lose it quickly? I've been watching that sentiment with TRX. Of course, I can't really, digest exactly what's happening, but what's your your approach to keep investor trust?
Yeah, look, I think Bill went in on it on what happened in the last cycle. They went on an M&A spree and things of that nature. I think it's discipline. It's hard to not get caught up in, oh, great, gold's at $5,500. Everybody's going around high-fiving each other and things of that nature. Capital's getting thrown at you. Gold assets are out there that may or may not be profitable and probably not de-risked to the extent that it should be. It's being disciplined and not getting too caught up and making sure that you execute well on your business plans and not get distracted. Be disciplined, create value, do what you say you're going to do. We consistently, I think, are starting to build up a lot of trust with people because I haven't wavered on what we're going to do. I've been pretty clear. Has it been up and down? Yes, but I've been pretty clear on what we're going to do, how we're going to do it, and when we're going to do it. And I think you've got to continue that clear, disciplined approach. Like I said, it may not always match the timing of impatient markets, but it will be rewarded over time.
All right, so
Denny,
this question. Yeah, go ahead, Bill.
Denny, let me just jump in on that. As an investor in mining shares, what you've done for the last 5 years, Stephen, you've not overpromised and underperformed. At first, obviously, investors were skeptical of what your plans were, but you've delivered on all of them on time, mostly under budget. And Denny, that is the number one way to lose trust of investors is to promise something and not do it.
Well said. Bill, Steve, this next question that I have is for both of you. Bill, I'm going to let you swing in at first. You've both seen cycles where gold runs ahead of operations. Steve, you're living inside the operation. Bill, you and I are on the outside of the operation. So, Bill, where do macro enthusiasm and operational reality most often collide, and how does that affect the price of, well, we'll just say it, the price of TRX right now?
Well, yeah, you get expectations that get ahead of where you are currently. I would just say that the fact that the gold price is where it is now, and like Stephen was just saying, I'll take $4,500 gold.
I bet he will.
That's run, that has absolutely run, and that's what you want. You want that gold tailwind. You want those higher prices for higher margins. I mean, it's obviously the most important thing there is to any type of mining operation. What is the cost? What is the cost to dig it out, and what are you getting for it? So obviously, much higher prices. It's a tailwind.
Yeah.
Steve, you're inside the operation. Where do those macro enthusiasm and operational realities most often collide? I mean, it's got to be easier to come to work these last 6 months than it was for the first 2 or 3 years for you.
Yeah, look, but part of that, Denny, is why it's easier to come to work in the last 6 months is execution. So if gold prices were at $3,500 an ounce, because of execution, it's easier to come to work versus before. So it's not, you got to set yourself up to be in a position to take advantage of a gold price run. A lot of the pre-production companies haven't run as much because they're still not exposed to the price in selling it, right? And you still need to raise capital. And you'll eventually run out of the treasury that's on your balance sheet. So again, look, I think particularly U.S. markets are extremely focused on cash flow and working capital.
Right.
And they're going to continue to be focused on that regardless of what the gold price is. So the gold price is a great tailwind, but you got to be able to be in the business too and be executing to take advantage of it. Again, don't become too distracted. Put your head down, execute, and the market will take care of you. And you will benefit from the run up in commodity prices. Commodity prices are great to have. It makes it easier, but it's still not an easy business.
Hey, Bill, gold's
Denny,
over. Go ahead, buddy. I got another question for you. Go ahead.
Yeah, let me add to that. If you look at how mining companies were valued in a run up in 96, the run up to the peak in 2011, mining companies, a good part of their valuation had to do with gold that they had in the ground with their reserves. And we've lived since 2011 where gold in the ground didn't really matter. It only mattered as to if you were in production, what's your mine life, basically. So the fact that there's zero premium at all for gold reserves, that's going to reverse. And at some point in time, gold gold in the ground is going to become the number one measure as far as valuations go. And obviously, if you've got a lot of gold in the ground but no production, that's a problem because you've got to continue the business. You don't have cash flow. I just think that going forward, gold in the ground is going to be re-rated, and that's why I'm optimistic with TRX, because we've got these two additional gold-bearing zones that we need to drill out and find out what's there.
Bill, let's tidy that up just a little bit. With gold over 5,000, at one point getting close to 5,500, it brings in new investors who've never owned a mining stock. What do those investors most misunderstand about mining businesses?
Well, they don't understand the business. I mean, in today's world, the average retail investor does very little research and basically is a momentum chaser. So I don't really think that question. I think that's a moot question, because I think mostly new investors to mining, they don't even know what to look for.
I would absolutely agree. Whether they're hedged or unhedged, they just don't have a clue. All right, Steve, if gold stays elevated for several years, which is Bill's prediction, what would you say is the biggest risk of success? I don't even know how to put that in perspective, but is there a risk of success for you all?
Look, you have to keep, again, I come back to discipline, keeping your head down and creating value and coming up with projects that create value and making investments to still have a return. Don't chase things for the sake of chasing things, and keep your head down, capitalize it prudently, and execute and create as big of a margin as you can. If we can be in our study, it says $1,000 cash cost, $1,200 all-in sustaining costs of $5,000 an ounce sales. Well, I'm happy.
Yeah, sign me up. Yeah.
Sign me up. Now, obviously, you want to make sure you control the costs that you can control. One that we can't control is diesel. We got to utilize that in the operations. But right now, costs are well under control, and we're going to expand, create more cash flow, and we'll figure out what to do with that cash flow when we have problems with having too much cash flow, hopefully.
What a problem. What a problem. All right,
well,
Bill.
I can tell you it's a lot better problem than I had 5 years ago when I joined.
Well, I have so many questions about what it was like 3 years ago for you, because we all lived through it. But all right, Bill, you get the last question.
Yeah.
For listeners who are new to mining stocks and they're feeling a little late to the dance, what would you caution them now not to do right now?
If you're looking to build a position, you don't go all in right away. I mean, you do it over time. Dollar cost average over a 3-month period of time or 6-month period of time. Just don't jump in head first, and understand that yes, the mining shares are definitely more volatile than the physical ounces themselves. So I would say, I mean, if you're bullish on gold, if you're bullish on silver, and you want a position, those are your core positions, the two physical metals. Your miners should represent, I don't know, 10, 20, 30% of your portfolio, but you don't want to be 80, 90% mining shares and 20 or 10, 20% in the physical metal itself. I mean, you want a boat that's going to stay upright even during storms.
Grandma always said the icing is on top of the cupcake. It's not the cupcake. And that's the way
Exactly.
we've got to look at those mining shares. Steve, before we say goodbye, have you got anything else you want to share? Because you've had one hell of a year, son.
Yeah, no, nothing to really share. Like our business plan's quite straightforward, and we're going to create a lot of value doing it. Build a bigger plant, get more cash flow, increase the value of the mining asset through the drill bit and taking the gold out of the ground.
You're a good man, Steve. You're just a good man. All right, well, that's about it for us. I'll get to Bill one more time so we can let people know how to find him. But if you have questions, reach out to Investor Relations at TRX. It's a real easy email. It's IR for Investor Relations, IR@trxgold.com. You can give them a call. Go to the website, trxgold.com. You can find some phone numbers if you want to give them a call. But Bill, if people want to track you down, how do they find you?
You can go to my website. There is a contact button there, or you can go to my business email, which is bholter@proton.me. And just as a final comment, I'm gonna quote something that Jim and I had talked about. I'm gonna say in 2020, 2021. His thought process, and I 100% agree with it, was that once we got into the territory we're in now, where the fiats are being devalued, it is the rally you do not sell. Doesn't matter where these things go to the downside, because once all is said and done, you're going to have, like you said, unobtainium. You're going to have a marketplace where you're not going to be able to buy the metal. Don't get shaken out, with sharp. Jim called them the fishing lines. Don't get shaken out on a fishing line. If you've got more capital, add, but don't. This is the rally you do not sell, because there's not a credible currency for you to hold your quote winnings in.
Exactly.
The
Where are you
place to
going to
hold
put
your
it, Bill?
winnings
Yeah,
is gold and silver. Exactly.
that's right. I think we all sort of miss Jim in so many ways for that type of philosophy. And Steve, you had to follow that legend, and yet you were the one that has implemented all of the dreams that Jimmy ever had. And I'm not sure you get all the credit for that, but certainly from Bill and me, we know who the king really is, and it's Steve Mullowney, the CEO of TRX Gold Corporation. Good job, brother. Good job.
Yeah.
Well, with that, I guess we'll let you go. My thanks to Steve Mullowney, the CEO of TRX Gold Corporation, and my old buddy Bill Holter from down in Texas. This will all be posted soon enough. If you have any questions, again, reach out to IR@trxgold.com. I'm Denny Smith for Bill Holter and Steve Mullowney. Thanks for joining us.